Monday morning, folks, and welcome to a brand new episode of the podcast. Last week was interesting because we had said, Ronan, at least when you and me joined, that uh, gold was definitely overstretched in its bull run. And as a result of easing tensions between US and China and some other tensions easing off as well, you saw a massive correction. And maybe just in terms of expectations as well. I think gold has reached somewhat of its fair value. But I want to understand, Ronan, from you specifically. Any interesting insights apart from, let's say, the price action that you were also monitoring that you would like to share with the viewers today?
Gold is up year to date over 26%, which in any normal year since 2000 would be one of the best performing years in the last 25 years. And it's only like 4 months into the year. But interestingly, the all-time high of 3,500 happened during Asian hours. I think it was probably like 1 p.m. Tuesday, Shanghai time. And a lot of this is being driven by the Chinese market. So Bloomberg had a very interesting article written by their journalists in Singapore, which came out on Friday, about the sheer demand that's happening in China, and the ETFs, the four big ETFs combined had inflows in April more than the whole of 2024. So even the Chinese authorities are having risk warnings on the Shanghai Gold Exchange and to the ETF providers about trying to dampen down that huge positive sentiment. So we have to keep a look at the Chinese market. And I think the Chinese market now is becoming more important for price discovery in terms of the previous LBMA, COMEX tag team.
Thanks for that, Ronan. Sunil, question for you. So we had the conference for silver recently conclude. What were some of the main takeaways that we could deduce from this conference, and what was the industry talking about at large?
I think there were three takeaways that I could come away with. On the one hand, I think overall people were quite bullish of silver, and a lot of people pointed out that the gold-silver ratio is above 100. I think it's 107 right now. And that's probably the highest it's been. So basically, gold seems to be overvalued compared to silver, or silver seems to be undervalued. And so people are expecting that ratio to correct. And obviously, given the bullish trend on gold, they do expect that silver will catch up and the ratio will come below 100 again. So I think people were generally bullish on silver. The second thing I would say is that there were a lot of inflows into silver ETFs, a lot of digital silver purchases. So overall, the people who are providing financial products in silver were very bullish. They were seeing a lot of uptick from retail investors, younger retail investors also. The third takeaway, however, was also interesting, that the industrials, the companies that use silver for making products like paste and solar paste, connector paste, etc., powder, they were hurting. The higher prices are hurting them. They feel that the higher silver prices, in addition to the tariffs in the US, are really not positive for the market. And a lot of them are going to are talking about customers looking for alternative to silver for use, maybe silver-plated products or copper-based connectors and paste. So this talk about substitution, which is really not positive for silver.
Talking about the price outlook, we have some interesting supports, resistances. Let's quickly look into that and see how the market shapes out for the coming week. So Sunil, Ronan, this is the weekly chart for US spot gold. Last week's podcast, we had mentioned that gold was overstretched in its bull run, and it was only a matter of time before which we would see a correction. That's what we exactly saw last week, courtesy of some easing trade tensions, definitely. This is last week's candlestick pattern also, which is typical of a bearish shooting star candlestick, a long wick on the top and a shorter wick on the bottom. We have to see next week how the weekly candlestick chart patterns come out to be. But this could be an indication that we may have seen a top as of this year, which is 3,500, based on how aggressively we saw some selling action here. Before we jump into conclusions, let's jump into the daily chart. One of the other observations on the daily chart was how gold rejected this specific trend line right here. It wasn't able to sustain above this black trend line, which coincides with somewhere around 33.80. This was the pivot earlier that was mentioned last week. And once it could not find acceptance above this, it fell through almost immediately and hit this level over here, which is 3270. On the 4-hourly chart for US spot gold, going one level below, there's a clear formation of a double bottom support. You can see that there is a double bottom support right here and right here, right? And clearly, whenever gold has hit these supports, immediately you've seen the metal pull back and create new highs, right? Almost immediately. This is what we know as a liquidity trap or a liquidity drag, wherein there are some orders that are being triggered right around these levels, as a result of which the metal does not remain at these levels for long periods of time. You see, as soon as these metal hits this level, it sees a trigger in the opposite direction, and we see the metal trying to reverse back. We also see that, in fact, last Friday, as soon as the metal hit this 3270 support, it again caught some bids and accelerated to 3319. So this is interesting, right? And this is what we need to wait and observe. Is the metal going to be able to hold above 3270? And also this purple trend line that we see here, which also coincides somewhere around 3250, 3255. If the metal is able to hold above these, that would indicate that we are going to see a resurgence in gold, which would then mean a break or a test of the 3356 pivot, which is the first level from a bullish perspective, followed by a march again once more towards the 3500 resistance, or the top that we had seen as of last week. On the downside, if we break below this purple trend line or the support over here around 3270, you don't see a lot of liquidity around this zone over here between 3220 to 3250, right? The last time the metal reached these levels, there was a quick ascent all the way up to 3300 and 3350. The metal had no time or very little time to consolidate for long periods over this zone. So that's going to be interesting, which is if the metal breaks below this purple trend line, you're going to see it free fall all the way into this green zone right here, which is around 3190 to 3200. That's where I think gold would reach its fair value based on the fundamental setups that we're seeing in the market. 3200 could be, let's say, the support that we could reach if we see further de-escalations in the US-China war. On the economic calendar for this week, we have the GDP growth rate numbers for US coming on Wednesday. It would be interesting to see how those numbers have shaped out, especially since we have seen moderations in the GDP growth over the last few quarters. And more importantly, we also have non-farm payrolls and unemployment rate readings on Friday. And we remember last month, non-farm payrolls shattered expectations and posted multi-month highs by showing a very strong labor market readings. So this week, 3270 is the level to watch out for, or this support over here. If we are able to break below this support right here, we are going to see a descent straight towards 3190, 3200, where a lot of buying orders, institutional orders or block orders have been found in the past. If we are able to hold above 3270, right, what is then going to happen is we might very well see a move towards 3356, which is the pivot, crossing which the metal will resume its advance and aim for 3400 and then even 3500, which was the top that we saw last week. Thanks, Neil. Thanks, Ronan. Thank you for that roundup. Let's see how the markets play out, as I just said. But till then, thank you so much and goodbye.